Jefferies issues a buy call on Voltas after the IMD warns of a heat wave in March, says the heat wave could be a tailwind for volumes and margins going ahead.
Wockhardt in its investor meet says it expects savings of around $12 million a year after restructuring the business. The promoters also reaffirmed their commitment to the company.
Mirza International's demerger of branded business gets an approval from the NCLT along with the amalgamation of RTS Fashions. Stock up by 4.5%.
And a big block deal in delivery sees around 1.7% equity change hands in a deal worth 410 crores. The stock corrects close to 3%. Hello and welcome to Chartbusters. I'm Rashil D'Souza and joining me is Mangalam Malu. Well, Mangalam, the first hour of trade definitely has gone to the bears. The bulls will be on the back foot right now, but if India needs to show that we're going to outperform from here on, when the market's a little bit jittery, I think we'll have to do a U-turn from somewhere around these levels. But for the time being, that entire support of around 17,720, that's got broken, which is a little bit worrying. Though the Nifty Bank, that's defending that 40,300 odd mark. So let's see whether or not that's the one that can stage a bit of a recovery.
Nigel, you know, the ones who had written the 17,800 straddle would have been playing for 17,650 at the lower end to around 17,950 at the upper end. The upper end, of course, doesn't come by, but we're close to the lower end of that range of those option writers for options that expire tomorrow. So if there has to be a recovery, it has to be from here. And if there has to be a recovery, it has to be led by the Nifty Bank itself. Yes. The question is whether there is one or not. So we will monitor that. The mid-cap index, if that is something to go by, you know, the weakness in the broader markets is quite visible and palpable. We have around 3 stocks which are declining for every stock which is gaining. So maybe, you know, the broader markets will have you believe that maybe there could be some problems for our markets. However, we will monitor where, you know, there could be some supports or not. Earlier, we were trading in that 17,500 to 17,700 sort of range. Today, we're around that 17,680 mark. We have Vishal Malkan from malkansview.com joining in for a quick check on the market. Vishal, your thoughts on the indices, whether they bounce back, they break down, where do they go from here?
Yeah, hi, good morning. I think what you said is right. Like these are the levels where we need to see market recovering from. Like 17,650 is a very strong support. Otherwise, we go back to testing the lows of budget day, which are like around 17,400, 450. Right. So this is an important level for Nifty as well as Bank Nifty, which I think has a very good strong support at 40,250, 300, which where it is trading currently. So a very important support levels on both the indices, and it's like a make or break situation at the moment.
Okay, all right. Hi, Vishal. Morning. What about individual stocks?
Individual stocks, I will still go with the buy calls only because I see there are a lot of stocks which are making bottoms, double bottoms and W patterns and all. And one of them would be Deepak Nitrite. Deepak Nitrite has made that bottom, which is retested a couple of times in the last few days. And that is around 1,700, 1,750. So I would go with a buy on Deepak Nitrite right now with a stop loss of 1,750 for a target of 1,850 and 1,875. And the second one would be IEX, which is showing some momentum in the last couple of trading days and crossing those levels of 140 on a closing basis. So I'll take a buy call on IEX with a stop of 140 for a target of 152.
All right, Vishal, thanks a lot for joining in and giving us your views on individual stocks. Even as the mid-cap index is underperforming, we do have a bunch of stocks which are doing well. Oro Pharma, case in point, has moved to the high point of trade. Abbott is the other one which is doing well. And then you have Petronet LNG as well as Balkrishna Industries, both of them doing well as well. Move to the high point of trade for both those counters. Let's talk about a few ideas for profit coming in from our colleagues at Money Control Pro. Khushbu Rai joins in with the stock.
The leadership position of Mahindra Finance has further strengthened in the financing of tractor, auto and non-vehicle segment with improvement in market share witnessed during the previous quarter. And the company has also announced its succession plan. Also, Vision 2025, the 3-year roadmap with well-laid strategic initiatives is progressing well in terms of asset quality and growth. The overall market share has improved in most product lines in the quarter, coupled with increasing penetration in the used vehicle financing segment. The maximum amount of traction could be witnessed in the personal vehicle and farm equipment segment with solid improvement seen in the return ratios. Now coming back to the asset quality, the ratios are improving sequentially, and post lifting of the RBI ban on the repossession, it is expected to further decline and benefit from the changing product mix. Now let's talk about the valuation. The stock is trading at 1.7 times FY24 adjusted book, which looks very reasonable on the back of company's leadership position and growth transformation. Also, we see further improvement in the return on asset on account of stable margins, additional focus on the OPEX and improving asset quality.
All right, Khushbu, thanks a lot for that. We'll step into a short break. On the other side, we'll get chatting with the management of Sagar Cements to talk about their acquisition of Andhra Cements, but more importantly, the outlook on cement pricing and demand trends as well. Srikanth Reddy will join in.
Welcome back. Well, as promised, let's focus on the cement space itself. And Sagar Cement, that's the one that we're looking at. There are three broad reasons. One is on the back of the price increases in South India, how much has got pulled through. Second one is on the acquisition of Andhra Cement. And point number three is, what's the way ahead for the company? Well, to understand all that and more, Mr. Reddy joins us to help us understand all of this. Hi, Mr. Reddy. Thanks so much for joining in. Well, let's focus on the pricing first. South Indian pricing, we understand, has moved up. And normally things are quite volatile on that front. So how much of a price increase has been pushed through in the month of February, and how much of that has got absorbed?
Yeah, good morning, Mr. Nigel. Thank you for hosting us. The pricing, what we have witnessed is over 10 rupees per bag got settled in over last week to 10 days. With the hope that further hike should come by, because the current margins are not sustainable with a low single digit kind of a return. So given that scenario, yeah, the first 10 rupees got settled in well. So we hope another 10 to 15 rupees should also come by before the middle of March is what we are internally expecting, Mr. Nigel.
Right. And let's talk about the acquisition now of the 900 crore acquisition that you've done of Andhra Cement. Just wanted to understand, 300 crores the equity component. Have you raised that money already?
Yeah, good morning, Mr. Mangalam. See, the Andhra acquisition, the overall outlay is around 925 odd crores. For that, 325 crores is the equity and the rest remains the debt. 325 crores has been raised a year back. We did raise the equity by diluting 10% of Sagar with the Premji Invest, Mr. Mangalam.
Okay, all right. So the equity raise has been done. Let's focus then on the ramp up of this unit, Mr. Reddy. You know, there was a big battle. There were quite a few players in there. But, you know, you all have been the winners on that front. However, the street believes maybe you're being a little too optimistic. You're talking about starting the unit in Q1 FY24 and operating it at close to around 50%, 55% capacity utilization in first year itself. Are you sure? Are you sure you can meet these numbers?
Yeah, Mr. Mangalam, first let me update on the asset quality. The asset quality has been extremely good. It has been stocked very well, though it has been stocked for 2 years, slightly more than 2 years. Our internal belief is that ramp up should not take time. Our intention is to start the first grinding facility by start of the Q1 and to start the clinkerization facility by middle to end of Q1 itself. We don't see any challenges in this regard. We are reasonably clear about the quality of the asset as well as the startup related issues. So we don't see that as a challenge. Now going to the next aspect of can we ramp up to 50% in the first year itself? Yeah, we strongly believe that it's a market which is growing and our timing cannot be much better than what we are in. The current market that we are in is actually growing at reasonably close to a double-digit kind of a number. Even on a pessimistic kind of a tone, even an 8% growth year on a year should help us achieve this 50% from these assets into the markets which we are already established, because the brand is going to be Sagar, and Sagar has been there in the market for over 40 years. So we don't expect major challenges in achieving 50% of the capacity utilization in the first year itself, Mr. Nigel.
All right. So you've allayed those concerns out there. No problems for starting the plant in the first quarter and reaching 50% utilization in the first year itself. What about the VCW, Visakha Cement unit? Could you tell us, are you likely to start it, or are you looking to divest it? What's the value you can derive out of it? What's the plan with regard to it?
Yeah, Mr. Manglam, this asset is a ball mill located in proximity of right in the center of the Vizag city. At this point of time, there are restrictions in terms of the outward as well as the inward movement of heavy trucks. So that limits the operations of this particular asset. And given the ball mills for a slag, we don't think that would be a most optimal kind of a thing. So internally, we are very clear, and that's what we did mention even in our press release, and that's what we have been stating, that we would not like to operate this particular asset going forward.
It's a 100-acre plant, that you have, the land size out there. What is the rough value of the land that's going in that vicinity? Suppose you have to sell it, then we just want to understand per acre how much is being realized in that particular area.
Yeah, Mr. Nigel, as mentioned, this is part of the city. So there are some limitations in terms of we need to assess the timeline that it would take to monetize. We are very clear we would like to monetize the asset.
Yeah.
But we need to assess quite a few things before we could start accelerating, looking in that direction of monetization.
So maybe, sir, we are in Mumbai. We're not too aware of the land prices out there. But could it be around 4.5 crores per acre? I'm not talking about this project.
Yeah, the government rate at this point of time is around 4 crores per acre, Mr. Knight.
All right, so roughly 400 crores given. Could be the value, at least given the government rates. Over and above that, whatever you all realize is purely up to you and purely dependent on the moment you decide to realize it. Any idea on the timelines that you have? Could you do it this year in FY24, maybe FY25? Any sort of inkling on that? Mr. Reddy?
Yeah, we are yet to assess the timeline that it would take.
Okay.
And we would be very happy to revert as soon as we get to know the timelines, because there are some government approvals that might be required.
Okay.
So, given that scenario, and it's an industrial usage kind of plot, so we need to really assess the timeline and the associated approval process that is required for us to monetize. We would be happy to revert back on the timeline. At this point of time, we believe that it should take anywhere between 18 to 24 months.
18 to 24 months. Fair. Okay. All right. Let's talk about the operational performance then. For FY24, what kind of a volume number will you look to end up with? Now, you have that Odisha grinding unit that's got commissioned. The Madhya Pradesh facility as well will ramp up. You have Andhra cement that will contribute some bit of volumes. So, on the volume front, what kind of a volume number are you looking at? And also your EBITDA per ton, it's come up a little bit from the recent lows. But what is the rough number you're looking at? Because on the cost side as well, you have been focusing. So go ahead. Volume targets as well as EBITDA per ton target for FY24.
And if things remain the way they are in terms of the cost as well as the relation, we do expect anywhere between 550 to 600 rupees EBITDA per ton as a minimum. If there are any variations to the realization on a higher side, that should add up. But we are reasonably confident of achieving anywhere between 550 to 600 rupees EBITDA per ton on a 6.5 million volume. The current year, we should end up very close to 5 million. So we are expecting a 1.5 million incremental kind of volume for the coming year.
All right, so 6.5 million tons in terms of volumes for the coming year. This year is 5 million tons. And you are confident of about 550 to 600 per ton as far as the EBITDA is concerned. Can you tell us in which quarter do you have the assessment for that? Any particular quarter by which you're targeting profitability on the bottom line?
Yeah, I would not expect to target, because we could obviously target in the first quarter itself. But we realistically think that in the coming...
I think we've got him on a scratchy line. And just at the moment when he was about to tell us... we probably try to repatch that connection.
Maybe repatch or reconnect so that we can get that number out.
Technology plays truant at times, you know, just as he was saying which
that,
quarter.
yeah.
But nevertheless, good
He's back,
guidance out there. Mr. Reddy, you're back with us. Just as you were about to say, realistically, by when you target profitability, we cut you off.
End of the coming financial year itself.
End of financial. All right. Very quickly then, Mr. Reddy, before we let you go, you've got big investors who have come in there. You know, you have the Premji Trust that's put in a lot of money. You have put in a lot of money. And you have the Belgium-based fund as well that's put in a lot of money. How do you realize value? I mean, what more can you do? Will you look to take a bigger chunk? Because the stock is at around 210 rupees. Everyone's put money at a higher price. Do they want to take a larger chunk in Sagar Cement? Could that be the plan?
Yeah, we do have very strong stakeholders, Mr. Nigel. It goes without saying. But we have been extremely prudent. We value equity at a very, very high premium. And we do have growth ambitions. We would want to become a 20 million by FY35. So any opportunities that come by, I'm sure with the strong stakeholders, we would not hesitate to get into that. And we are reasonably leveraged, so that also gives us some space. So given that scenario, yeah, at the right time, we don't see it as a challenge to reach out to the stakeholders just in case if there is a requirement from an organizational perspective for its growth plans.
So more than doubling your capacity is what you're saying in the next 13 years. By 2035, you want to be 20 million ton. Before that, suppose someone gives you a big check. Will you consider selling out?
I think that's something which we would like to look at it once we see the check size.
But you're open to that option as well, if the check size is big enough.
Yeah, I think there is never a no if it's a very tempting valuation, Mr. Nigel. But this is very subjective, so
Yeah.
let me put a caveat there.
We appreciate you joining in, sir, and giving us your view on cement pricing, on the way you want to ramp up business, and maybe the check could be due, and we'll have to see the size, but for you to go ahead.
Just a few more zeros, maybe, Nigel. Just had a couple of zeros. And
I'm not sure how many zeros are on Mr. Reddy's mind, but he's been when he acquires assets, he wants the best possible valuation. So I'm sure if in case he wants to sell out, he'll want the best out there as well. But good speaking to you, sir. Thanks so much for joining in and filling us in with all of those details. For the time being, we'll slip into a short break. You come back, we'll continue our focus on the markets.
Welcome back. The market's taken a turn for the worse. The Nifty Bank is now down 464 points, down almost 500 points, broken the 40,300 mark as well, around 40,200 for that index. And the Nifty, as a result of which, is down by 1%, very close to that 17,650 odd mark. ICICI Bank, that's the one which has fallen in one sharp swoop, currently at the low point of trade, pressuring the Nifty as well as the Nifty Bank. And HDFC Bank too is at the low point of trade. But we are talking about individual stocks, and one of them in focus is Wockhardt. After the analyst meet that took place yesterday, Ekta joins in with some of the details of that. Ekta.
Thanks for that. Well, yes, Wockhardt was in focus because of the investor meet that they held after a hiatus as well. And a couple of key takeaways has actually enthused investors to look at Wockhardt today. For example, they did indicate that there would be annual savings of around $12 million, which is via restructuring of the business. Restructuring of the business would include the shutdown of their manufacturing facility at Morton Grove. The agreement that they have with Serum for vaccine manufacturing at their UK facility, they have received £10 million as a contribution for reserving capacity. Remember that this particular agreement is for 150 million doses across 15 years. And Serum has identified 2 vaccines as of now for this agreement. The company also plans to manufacture post the regulatory approvals as well as exhibit batches. So that should probably come on stream 8 to 12 months from now. Now, in terms of the R&D portfolio that they have, the novel antibiotics, one particular antibiotic in their portfolio, which has in fact been launched in the Indian market, is Emroc, and they expect approvals in 8 emerging markets in the next 6 to 9 months. Now, WCK5222 is another product which is in their R&D scope of their business, and that is a novel antibiotic as well. They expect to market the product in key geographies such as US, China, India by 2025. Now, importantly, in terms of the balance sheet, the long-term debt of the company has reduced significantly. It's come down to around 608 crores. And compare this to FY17, where the peak debt was over 3,200 odd crores. Lastly, the promoter has also indicated that they are entirely and fully committed in the business. So that has probably enthused investors further.
Okay, all right, Ekta, thanks a lot for that. Well, on that note, though, we'll have to wrap up on this edition of Chartbusters. You stay with us. Markets are trending lower. Trading Hour takes all the action forward.